Let's have a quick look at the performance of the TSX today. Of course, it was all on its lonesome with the US markets closed for the July 4th holiday. And a reminder that our market is up something like 6% this year, 6.1%, lagging the return from the US markets this calendar year. Let's have a look at some of the big sectors in Toronto. I touched on this yesterday. The banks, well, their returns have been weighed down this year by pessimism over Toronto Dominion Bank, the great unknown as to the financial damage they're going to face in that probe of alleged sloppy money laundering control in the United States. So the financials group is up only about 4% this year, lagging the broad index. The energy stocks have not done that badly. They're up about 13% this year. That's the second best performance. The materials have done best. They are up about 16%. Real estate has suffered. It's down around 5%. Of course, there's pessimism over offices, for one thing. We touched earlier on the home sales in Toronto. They saw an uptick last month for the first time since January. And the number of listings also saw a boost. And the benchmark selling price rose to just over $1 million. Let's bring in Ross McCready, a veteran of the industry and president right now and CEO of Sutton Group Realty Services. Thanks very much indeed for coming on the show.
Well, thanks for having me.
Start off with Toronto, would you? What are you hearing? What are you seeing within the Toronto market, the biggest real estate market in the country? What are the trends?
You know, the trend, I mean, actively right now, I think the fact that we had interest rates rise so quickly during the period that it did, it's going to take a while. So the fact that the perception is that we had our first rate cut, but it hasn't really moved the needle. It hasn't moved public sentiment. And within real estate, it's really the perception of the industry is what's happening right now. And the perception is that there's still a lot more room to go before people are going to start realizing the pain that as people start to refinance their homes, they're getting a bit of sticker shock right now.
So you mean a lot of people still have to renew mortgages over the next few years, and that'll be at higher rates?
Much higher. And again, if you go into the higher end of the market, sort of north of $3 million, it's not nearly as much of a problem because they're not financing as much of that property. But the condo market in particular is actually getting hit pretty hard because either if someone's financing or you've had a number of other factors where things like short-term rentals are not an option, and you had the capital gains exemption that was coming in. So there's just so many different factors right now that it's pretty hard to just lay it on one thing.
Talk to us about condos. You hear various numbers, but it sounds like a large number of Toronto's condos are owned by investors or people who bought them either to speculate or park money or to rent out. So is a lot of the condo market owned by these investors?
Yeah, it is. And the GTA in particular, Toronto pre-sales more condos than just about any jurisdiction in North America. It certainly is, and has done for the last 20-25 years.
Wow.
So when you start to think about the investment community and then homeowners and the net migration in the GTA alone, certainly there's a lot of demand. But if you actually look at the cost of affordability for a new condo or to rent or to own, it's becoming out of reach for a lot of Canadians.
So the condos are meant to be a cheaper option, a step onto the ladder, but a lot of people can't even make that first step. Condos have become so costly.
Yeah, so I mean, if you're an investor and you bought a condo and you thought you could rent it out and make some money here, or at least get a reasonable rate of return, you've had a number of factors happen through COVID. Obviously, you had interest rates rise at the end there. You also had a lot of the cost to landlords, to the HOA fees. So many other things are driving up the cost of home ownership, or whether it's in a condo or a single family home, that when people start to price out either to rent as an investor or simply to want to jump into that market, it's just a difficult time for Canadians, and they really don't have a lot of perception as to where the market's going. So I think, you know, it's good that we're getting some stabilization with interest rates coming down a bit, but it's not going to move people's the needle for so many Canadians right now that are going to need to refinance over the next year and a half.
this is a kind of an artificial scenario, but if somebody came to you and said, look, I've got $5 million, I want you to advise me on investing it in a single residential real estate market in Canada, where do you think the best value is right now?
Well, I'd say in some of the major urban markets, the single family home category has been incredibly strong. I live here in Vancouver, but I would say Montreal, Toronto, Vancouver, all of the top single family neighborhoods. They tend to do quite well because financing is not a big issue there. I mean, most of the homeowners that are buying in those marketplaces are paying a significant loan to value, and they're putting down 70 or 80% in cash and then financing maybe some of it. But when you get into some of the other markets like condominiums in some urban areas, you have either investors or first home buyers who are definitely, when you think about what our interest rates were 3 years ago, the cost of owning the financing piece is 2 to 3 times what people were expecting.
And what are you doing now? You just bought Sutton Group Realty Services last year. You've been around. You were the founder, I believe, of Sotheby's Canada. So you have been around in Canada and the US. What are you doing at Sutton Group? Are you doing commercial real estate or residential or industrial?
Well, it's a residential brand for the most part. About 80% of our business is residential. But prior to that, for the last 10 years, I was working in California with a company called Pacific Union in San Francisco. And then we merged with another company called Compass, and we created the largest brokerage in the U.S. But it was really about the foundation of data and information and people having access to that. When I came back to Canada and started looking at how Canadians make decisions related to real estate asset purchases or management, I was pretty dumbfounded as to how difficult it is to get good data and information that's verified either at the municipal level, provincial level, or federal level.
That's true.
So buying Sutton Group was, we have a technology platform that we're developing so that we can empower Canadians and homeowners to make informed, intelligent decisions at the time of either making a transaction or in the future. Because most people don't plan to deal with selling a home until it actually has to happen. And unfortunately, it's usually death or divorce. Two horrible situations, but people make very bad decisions, and there's a lot of bad actors that get into the industry at that point.